Um, I look, I think in the past it was always the team,
Hmm.
but now it's that the team can also consist out of agents. So
Hmm.
that's probably the main shift. I think the whole tokenization in Hong Kong itself is probably just something which is a pre-built for a whole Belt and Road or trade finance token, let's say trading platform. I would see it more from, okay, what is the opportunity out of a war? And usually out of war is always opportunities. So what happens after that or when there's a stabilization?
Tech is global, but fintech is often local due to regulation and licensing. But that's changing. I spoke with Maximilian Plank, venture partner at Tenity, who specializes in developing corridors between China, the Middle East, and his home base in Switzerland. I spoke with Max about AI, blockchain, and how this fits into Tenity's dual mandate of venture investing and building accelerator programs to help startups and fintech connect to financial institutions. Max Plank from Tenity, welcome to the program.
Hey, hi, thank you. Hey, Jame. Hi, how are you doing?
I'm doing great, and very pleased to have this conversation with you. You are one of the managing partners, I guess, at Tenity. I don't actually know your precise title, but you're in the business of VC and accelerator programs with a focus on fintech. So I think we have a lot to talk about.
Totally, absolutely. I mean, technically, I'm a venture partner for Hong Kong and Saudi Arabia and joined Tenity, I think, 2 years ago. Maybe for the people who don't know, Tenity is originally the corporate VC arm from the Swiss Stock Exchange. 10 years ago, we started, it spun off meanwhile. We did roughly 250 investments, have three vintages, and manage 140 million AUM. But what is different to other VCs is that we also run a lot of corporate innovation programs. So we have probably 100 corporate partners globally where we do run innovation programs that could be from they would like to select a company to invest, that could be to get more market data, or also understand how consumer behavior is, where we run then programs and get the right companies who work in that space with the corporates together. And
Yeah.
usually out of the program, some business is happening.
So let's start with that. When you're dealing with your LPs, what are they looking for today in fintech companies or founders? And how is that different from either when you started 2 years ago or conceptually, let's say 5 years ago?
Well, I think our LPs are different to other VC LPs because we have the corporate investors. So
Yes.
UBS is an investor, Ripple, some of the bigger names. They want actually to understand more where is the market going globally. So when they invest into us and we have a global investment mandate, we index technically what is happening, what is getting hot in which area. Because the companies we invest is seed, pre-seed depends a bit on the jurisdiction is too small for them. So actually, they invest first in our fund, and after that, they can have a co-investment right in these companies in a later stage, or that we connect with them.
So when
So
you
I
talk
think,
about what's hot or not, to what extent are you defining that based on yourself as a venture investor and finding interesting companies, or are your financial backers coming to you saying, well, these are the kinds of gaps we have or what we need. Can you go out and find startups that would fit that?
yeah, but that would be separated. The fund has multiple IPs. I mean, of course, there's sometimes specific mandates where are, let's say, besides the normal fund management, that can happen too. But of course, we don't have an impact on that. An LP says find some specific companies or areas for the fund because we have multiple LPs in the fund. So that's technically not possible. But yeah, we have some advisory mandates in the innovation part where explicitly that is happening, or even that we run a program to select companies who fit a specific purpose for the banks. So that's happening more on a program level and is then outside of the fund level.
Right. So on that program side, the accelerator side, what do you
Mhm.
get a sense of what's the demand right now? Are there particular types of companies or services that large banks, wealth managers, etc., are really eager to explore or get stuck into right now?
Well, I think it's always about distribution, I think, or distribution is a big part. I mean, or let's say adoption. I mean, in Singapore, we run an Ripple accelerator program where, of course, the focus is to have an adoption on the Ripple blockchain.
Okay.
I think it's you cannot say it's so general because it's
Right.
really so diverse from governments to corporates. So I think it's I mean, I would say it maybe differently. I think a program is for that to find the right companies or for your problem. First, you define a problem. When you have the problem, we start defining the program, and then we select the companies who might fit or solve that problem, and
Yeah.
then bring them together. It's more a process approach, and that can really differ from corporate.
Max, you said you guys have three funds. You're on your third fund
Yes.
now. So,
Yes.
what's the composition? How has that changed over time? Fund one, two, three, and perhaps if you do another one, how that might look different. The types of fintechs that you're investing in.
Ooh, that's a good one. I mean, I can say that we are currently working on a fourth one. The first three were more general, I would say. I mean, so there's not a, I mean, you cannot say that we have 20% wealth management,
Mhm.
30% insurance. It's difficult to say. In the end of the day, it makes the investment decision is made on the team and on the opportunity that this company will growing. So it's not no one sector within fintech. But for the fourth fund, where we're currently looking into the blockchain infrastructure, which is a specifically fund for that purpose, because we see there also quite a lot of changes globally. And so that's which is a specific topic where we set up a new fund now
Yeah.
currently.
Can you talk a little bit about the thesis? What are the core changes, the most important changes that you see happening, and where you can
Well,
add value?
I, I mean that's technically happening since 10 years in blockchain,
Right.
right? Where people say cut off the middleman. I mean, this is but now I think it's happening a bit more. I mean, this whole tokenization topic is a buzzword for 8, 10 years.
Yeah.
Um, I think you now see more and more getting liquid products getting on chain. The other part is probably the whole, I mean, actually in Switzerland, there's one company which which is Speaks Digital, which is an exchange which got the first FIM license explicitly for a trading system based on blockchain, which belongs to Stuttgart Börse Group. I don't know if you have heard about them. So actually, that's that they issue in the future structured products on blockchain, and what they made their investors are mainly all the other issuer. So actually, they integrate the market participants as a shareholder and for future distribution. I think something like that is definitely parts where to look in. When you look into Asia, I think there's also a lot changing from the Hong Kong perspective. I think the whole tokenization in Hong Kong itself is probably just something which is a pre-built for a whole Belt and Road or trade finance token, let's say trading platform. So anything around that, which generates fast adoption. I think that's what we are looking at. To be honest, it's not my main. I'm not the main investment manager on that fund because we have also a partner there, which is explicitly coming from that area. But I personally see that this is that's the main reason why to do that because this is here to stay and is not just another hype. That's the reason for that.
Yeah. Within that space, you've talked about distribution, you've talked about how create the pipes to create product and pass it on. What about some of the fragilities with anything to do with blockchain? Lack of recourse, uh, cybersecurity risks. There's still questions in the infrastructure layers around, can you trust an L2 or any kind of sort of bridge? Do you have any thoughts on whether or not startups can scale in that way? Is there demand for that kind of defensive play as opposed to the offensive play?
Ooh, it's a good question. I think I mean, I think there's no doubt about that everything will go in that direction. The
Mhm.
question is just with what speed and in which areas. So I think, yeah. I would reframe it. Why do you trust a startup which has nothing to do with blockchain, right? Which is a centralized system. A blockchain is usually quite transparent, so you know what is happening. So I'm not sure if that's something. I think it's more if people lose control or not. I
Mhm.
think that's a much bigger problem in the adoption process. So in the end of the day, what is changing? So why we don't have so much adoption in the whole blockchain space? Because people probably do, or companies didn't want to change the existing systems, or didn't want to give up control, or it was even a regulatory or a government decision why not to push in one direction. So I think that's I let's say that way. I heard it from one person who just said, in the end of the day, it's about cost, reduction of cost of transactions and reach of distribution. And if these two things are happening, then usually all the big players will start looking into that because it's cheaper and more profitable for them.
For the startups that you invest in, do they need to have any kind of license, or are they just plugging into, say, a bank's license?
Both. I mean, I think it's I don't quote me on that. I think it's 60% are non-licensed businesses at the moment, but I think that will change significantly in the other direction because the license is, I don't know, something like the patent of the future. Because if you're not licensed, then you have not a competitive advantage. I think also in the whole AI topic, when we talked about blockchain, usually as these parts combined, you have to have a license, you have to have a domain expertise, and you have to have proprietary data. That's probably something which you can where you can protect yourself and where you generate value. Compared to that, because you can build today an app which is great, which gets traction. I can do the same tomorrow.
Right.
So why from an investment perspective, I would lose when I invested in you. So I think that's something where licenses have definitely a complete game in the future. So yeah, that's definitely something which is a high on the decision
Right.
criteria.
But you're framing that more as a question of a moat against LLMs and OpenClaw or Claude or Copilot, so on, building their own software versus a legal necessity just to operate a securities related business on chain.
Well, you can do both, no?
Mhm.
I think technically. I mean, it's not a problem. I mean, you probably have to have a software audit in the end of the day when you start with the vibe coding your project, but I think one is not exclusive to the other.
Right.
And I believe all goes more and more in that direction. I mean, yeah.
What else is happening with the AI LLM revolution that we've had? The whether it's the SaaS apocalypse that people have referenced, or ability for founders to grow something really exciting. How do you look at that when, particularly in the context of fintech, where there is usually some touch point that's regulated or licensed somewhere? Um, what has AI meant so far for your portfolio choices? And yeah, just how do you think about it?
Well, I mean, per se, I think it's ultra exciting. I think I don't know if you tried it yourself to install OpenClaw and just see how powerful that is, or vibe code some projects yourself. I mean, we did it internally with the firm for an offsite once. Um, I think it's it's I think it would drive definitely new applications. On the other questions, what I see on founders is more that they don't have data to
Mhm.
actually utilize that. So
Right.
that's question is more, where do you get the data from first, and then what kind of problem do you solve later with that LLM? So let's say the AI is maybe a commodity in the future, right? So you have different models you can use. Some models are better for the other. We come back to that what I said before. What is the data set with proprietary you got? So technically, from a perspective, you have to look how you get proprietary data. Maybe you have a service up front which you generate specific insights. And secondly, you have to have for sure domain expertise, how a market works or how a problem works, because all these startups, is it fintech, is it whatever industry, you have to solve a problem which is a real problem and not a synthetic problem. And so therefore the focus is really on these two things. And then of course the license is more yeah, the license is something which protects you, but it is also gives you the opportunity to work with the incumbents.
Right.
because not every company is a Revolut or is a B2C company which grows significantly fast. So a lot will probably integrate with the incumbents or the players in the market, and for that they need that. I
How
mean,
do how
that's
do founders get access to proprietary data? How do they either grow it or secure it somehow? And do you see when you look at founders or their teams, that must now, I guess, be a core question that you have of them. How do you analyze their ability or their likelihood of succeeding in when it comes to securing data?
well, they usually have some data when they come to us, so it's
Okay.
not it's not completely from scratch.
Right.
So therefore, you saw a lot of traction, and usually it starts in a local market before there's any expansion. So you need to see traction in the local market. Even sometimes in the fintech space, their problems are different in the local markets because it has a lot to do with the financial industry, how mature they are, what kind of services they take over, and what kinds of service they don't do where you can solve a problem. So I think you see that quite early how fast they can generate that data or have it already.
And are there changes in the profile of the founders that you favor right now compared to, you know, let's say
But
before
I would
COVID or yeah, I mean, do you have a sense of it, do you need a different kind of DNA or is it really the same people just with updated business models?
no, I don't think the world works like that, right?
Okay.
Um, I look, I think in the past it was always the team.
Hmm.
But now it's the team can also consist out of agents. So
Hmm.
that's probably the main shift. So there's hey, one person can build a $1 billion company. That's probably becoming more and more real. Don't see it so in the fintech space, maybe in other distribution cases, in medtech part in the US or but uh, but that will come for sure. So I think it's more is the person able to use AI and control AI. I think that's something which is very mandatory from a mindset perspective. How they approach AI as a topic for every day, for every task they are working on, because that's probably mandatory for the growth and the competition in the future.
Let's talk a little bit about geography. You're based in Zurich, and your company has obviously deep Swiss institutional roots, but you're also the point person for Saudi Arabia, and you spend a lot of time in Hong Kong, even if it's not your direct responsibility. So those, if I understood it right,
Maybe it becomes.
those are your three big markets, if I got it right.
Yeah,
So
for me personally, yes.
yeah. So I'd love maybe if we could spend just a little time, go through those three markets and give me a sense of what's kind of working or what's super important right now in those places that might be particular to that market, or perhaps connects to the others or has a regional or global relevance. Maybe just start with Switzerland since that's where you're sitting today. What's unique about that marketplace and or what's universal about it? Just what's interesting.
Well, that's I mean, look, Switzerland is an offshore hub for many years, right? So
Yeah.
there's a lot of banks. We have similar amount of banks like in Hong Kong, like over 200. But also over the years, I think the banking industry, the amount of licenses were reduced. We have a lot of global insurance companies sitting in Switzerland. So per se, we are quite strong on that. Then we were one of the first in the world with a DLT law for the distributed ledger technology. So that started the whole crypto valley, let's see, setup where most of the layer ones founded their foundations in Switzerland and started let's say, a hype out of that. That changed a bit over the time, to be honest. I think also the regulatory framework became not stronger, I would say, not tighter, I would say more mature. And so some people wanted to do just more new stuff and went into other jurisdictions. But per se, it's a very stable financial system here and a very stable regulator. So, and also it has a very high reputation. So when you start out of Switzerland and you come with a license from FINMA and you go somewhere else, you usually have very fast second licensing.
Yeah.
So it's plus you also have a lot of banks which also need to have a digital transformation. So there's a lot of, I think from a market perspective, it's more B2B than B2C. Uh, that companies focus more on that to serve the banks in their innovation part. That's what I would say for Switzerland. From
Okay.
an investor perspective, it's not a fast changing market, so that means some things can take longer. Also, from let's say securing financial rounds can take longer. So it's very solid, but fast growth will happen in the other markets. That's
Right.
probably why I spend more in the time in the other markets, and
Yeah.
also where growth is per se in the market.
Yeah. But just staying with Switzerland one quick second, though, in terms of your accelerator side, when you're supporting these companies and helping find fits for the your investors, um, Switzerland, you said it's slow, it's expensive, blah blah. So how easily is it for startups, which traditionally don't have lots of um, cash lying around, to kind of play that long game? And is that a role where you slot in to try to help them sustain themselves long enough to be able to get those valued licenses or relationships?
Well, that's one part, of course, what we do. I mean, that's we've definitely an accelerator, a general tenancy accelerator in Switzerland, where this is about, where they get their first check, where they get access to other investors. I mean, we curate a network of probably 500,
Mhm.
where we have demo days, where they can pitch, where they, of course, get also additional opportunities for investment. So that's, I mean, we are probably the strongest player there in the Swiss market. I said it more from a general when you what I said before. If you would like to raise money here, it just takes longer than maybe in other markets because the risk appetite is just lower from the investor perspective.
Okay.
That's what I wanted
Okay.
to say with that. But yes, that's our bread and butter
Yeah.
to do that.
Let's get to some of the more racy stuff. Saudi Arabia, the whole Gulf has been quite an interesting story for fintech, for blockchain, for AI. Now the war is very disruptive, and maybe let's start with that since that's in the headlines. I mean, how are your companies kind of dealing with this? How do you look at how the geopolitical crisis taking place with the American-Israeli attack on Iran? Closing the straits, attacks on data centers, attacks on Gulf infrastructure. So how are your fintechs there responding? How do you feel the authorities are able to try to protect their ecosystem? And as an investor, how do you look at that situation now?
Yeah, I mean, look, I think it's the Middle East is not just the Middle East, so there's different countries, and the
Yeah.
conflict, of course, is not in favor. For on the one hand, that people are going there, that people are consuming there, that money is flowing there. So that's per se. I think we. I would see it more from, okay, what is the opportunity out of a war? And usually out of war is always opportunities. So what happens after that or when there's a stabilization? And there's probably, I think Saudi has probably the highest opportunity out of that because it's a complete different market from the, let's say, population, from the maturity of the financial system, and also from that, what the market would like to achieve based on that, what government says, and also what kind of mega events are happening in the future. So I would say it's difficult to quote a running war and how people are. I mean, when you also know the whole media setup, I can tell you, I'm talking probably on a daily basis with people from the region. Definitely more on Saudi side, where the country is also much bigger. I mean, just from population and from the country size itself, but also from yeah, where is the opportunity? I mean, I did a report last year about the fintech opportunities in Saudi Arabia, which is actually something like a investment thesis for us, where we looked into the market and wanted to find out, okay, where is, let's say, an opportunity, where is a missing gap. And so that's why we also shift more and more in that direction. From the UAE and Qatar perspective, I think that markets are used to be quite attractive for foreigners to go there and to set up their business. But I personally, I mean, I'm an entrepreneur myself. I always look into where's the market and where's the customers buying. And probably if the market gets too crowded for people who just want to do licenses and there's not maybe then a customer, it's a different reason for building a business maybe that
Right.
there. Whereas in Saudi, that's definitely from a market perspective.
And are valuations being impacted one way or the other?
To be honest, I haven't seen that yet. I mean, it's let's say what you see is that of course the let's say the investment is going down, the venture investment is going down, but there are different reports around that. So we didn't do any deployments in that area since then, but I see that there's quite a, let's say, companies are still built. There's no, in Saudi definitely normal business, so there's everyday calls. There's also a clear focus on the bridge to Asia. I mean, we have Leap East as a conference in July, which is the biggest tech conference from Saudi, which comes to Hong Kong. So this whole axis between Asia, or specifically China, Hong Kong, and Saudi, I think is one of the most interesting one, where I personally look after, and where we also would like to spend a fair amount of time in the future,
Yeah.
from a program and investment perspective.
And on fintech itself in Saudi Arabia, what's hot right now? What are the kinds of companies or plays that you're most interested in exploring?
I mean, the most hottest part was the so buy now, pay later. But to be honest, I mean, that's a bit, I mean, I would say personally, I'm not sure if it's good for a market if you put a lot of debt on people.
Hmm.
So it's short-termly very significant growth. Then what happened out of that is that banks had a problem with the balance sheet. So now they can put that in SPVs and can offload that. That happened quite some big transactions lately. I think this is probably growing further and goes more into the SME part. I personally would look more into the digital wealth management space. You have a quite strong transition of the second and third generation wealth, and also more transfer to women. So there's not really a catering from the banks there for these new affluent, let's say, investors. Plus, they are also interested in not only the standard products, because the offering from the bank perspective is usually not so good. So I think that's a very significant one. And the second one is insurance. So the government has clear focus there too. So they have even a new insurance authority. So what they would like to have more life insurance, so that people can technically self-sustain, so that there is no further, yeah, let's say that the government is not responsible in the next 10, 20 years for the self-sustaining of the people. So life insurance, everything around that, life insurance, distribution of wealth products is probably something which is very interesting.
All right, great. And last, let's talk about Hong Kong. Why Hong Kong as opposed to say Singapore or other parts of the region it gets you the most excited?
I mean, Tenity itself, we have an office in Singapore where we focus on Southeast Asia. I think I'm probably more the exploring part on that side. And after Saudi, I saw a lot of Chinese delegations when I spent a lot of time there. So that was something to, yeah, to explore it. It's also a big financial hub. I think it has a lot of energy, the city itself. Also, the city is changing. So this whole being a global connector, which is the new purpose of Hong Kong, changes significantly what kind of people have to be in Hong Kong to explicitly do these connections.
Hmm.
Because let's say that the business model was different in the past. So plus also you have more from mainland coming in, which exactly need these bridge. So that's why I'm personally super bullish on Hong Kong. And spend probably 50% of my time there. So I see as the highest opportunity the geography between China, Hong Kong, and Saudi Arabia, because both, let's say, one need to find a market where they can grow, and the other need to find companies who can support them in their own growth. So that's why I personally spend most of the time there. Also looking more into China. I mean, we just started that, but there's quite some interesting companies just from a data perspective. I mean, they have so many clients. They have also a high competition in the local market. So Hong Kong is the first bridge to internationalize, and from that, bringing them further is something which we will focus more on the future.
Yeah. What kind of fintech businesses from mainland China are you looking at, or have you so far been able to enable either them to raise, invest in or bring them to market somehow, whether that's in Hong Kong or beyond?
So that's just started. So we launched a boot camp in Hong Kong where we attract Chinese companies to bring them to Hong Kong and make them ready in a 4 weeks program to decide where they go overseas.
Mhm.
So this program starts in 4 weeks, the first batch. So far, it was more exploration, to be honest. Um, but yeah, just from a there's super interesting companies also when I mean, one, for instance, is WeBank Technologies. I mean, they have 450 million retail clients in
Right.
China, 6 million business clients, and now the technology arm goes from Hong Kong to serve banks globally. So it's quite an interesting, they have data, they have knowledge, they have a process. So I think this is the kind of interesting companies. I mean, there's also when you look into the blockchain space, I think it's also interesting who builds the bridge between Hong Kong and China,
Mhm.
and who builds then further from Hong Kong to the Belt and Road or to these areas. So that's topics where I think is quite interesting. But we are really on an early stage. So that's the first program, but we will focus more on programs between corridors for specific markets because that's where you also get a lot of interesting companies who apply, where you have also a good deal flow. That's also the reason to do it.
Great. Well, Max, thank you so much for joining me today. I'm based in Hong Kong, so I hope that we get a chance to meet face to face on one of your visits.
Yes, for sure.
And thanks so much for sharing your views at Tenity with me.
Thank you very much. Thank you.